Hello everyone, this is Sam Wong again. Today is June 17. I want to touch base on what's going on with the market since beginning of June, and also give you some insight about how I think the market going to go in the macro big picture. Since the beginning of June, U.S. equity have been volatile but generally resilient. The broad trend has been a rotation away from the most crowded AI winners into cyclicals, industrials, financials, and smaller cap stock that actually benefit from this move, while the overall market still remain very strong with growth reporting very solid growth. Of course, the market also focused on one of the largest IPO, which is SpaceX. As you can see in the graph below here, is open. Well, before you open it, it showed 135, but obviously once it's really started, it hit a very quickly hit $150, and you can see that in the 2 days it's actually gone up to $175, and it continued to rally at it closed in Tuesday to over slightly $200 per share. So this stock really, if you ask me, it could be turned around like let's say 100% return. So the prediction then will be like $250 potentially. However, you have seen the other IPOs before that the price will continue to push into very higher with very because Wall Street have been very sugar coated, and also technical. People believe in the smartest man in the world, if you will, I said that Elon Musk, and his vision about how things work in this SpaceX in the space um, area, and how you're going to be uh, materializing the return of this this companies, right? So you have a very great anticipation right at this point in the future state of how this is going to be, just like Tesla. Think about the story, right? How it was growing from at the beginning to where we are at today, right? So you will take times, and of course the stock going to go up. Like Meta is another great example. Facebook's many years ago when you started IPO, you started at $23, $26, you jump up to $43 in 2 or 3 days. Then after that, it's actually kind of slipped down, and then there were lawsuits going on because of a lot of people losing money. There's some strict regulations about IPOs and so on. But obviously, for those who are actually holding the Meta since $26 or $40, wherever you bought that, till now, you get 10 times return in 5+ years. So it really tells you very good stories, telling that it's very important to bear in mind that even this stock may go up $250, $300, why not? But there will be opportunity to slip it back. So I would say that's the time for really looking at long-term vision to go buy this stock. Now, instead of buying this stock, so another alternative is really go to Tesla. And the reason for that is at least you can look at the performance and look at the historical trend of Tesla. And it did gone up Tesla since the day before SpaceX go public. It was actually $380 on that day, gone up to right now $410. So if you put the perspective, obviously the percentage return us as rosy as SpaceX, but this kind of guaranteed with historical trend that can prove the stock going to push up, right? And I really anticipating that Tesla have been lagging, in the last month or so. It probably will come back up a little bit more. Okay, so now from a market perspective, what was the biggest market drivers? Federal Reserve expectations. So tomorrow there will be Fed meeting again, discussing how inflation, impact, and job numbers going to impacting what is really the vision, right? The expectations of Fed about interest rate. So this will have driving the market tomorrow, which is right now I'm past midnight doing this recording, which is today. And also AI continue to be in semiconductor spending. So a lot of company remains saying yes, this is going to be a long-term driver. Massive capital spending by cloud provider and continued demand for AI infrastructure have supported the earning expectation index performance. Also, there will be continuously like some IPO stock going to come up, in this year that related to AI as well. So we will continue to see the spend in the future for this, but it needs to be proven every quarter that these companies will continue to make more money because of the AI. So this, will be our touch base one of the stock in my next video. And also, there have been profit taking and we increased volatility in this semiconductor space. Although you can look at the video, you can look at the ACLS stock I recommended, and then some other stock like AMD, and the prices are still remain very, very strong and high, right? Relatively speaking, but all because of the chips that is necessary to drive in the space, and in the future. And also oil prices and the Middle East developments. And obviously, over the weekend, that Trump has talked about the the treaty again with this war. So it's really a big news. So that's why Monday the market has opened up very solidly, and really Dow Jones Industrial Average in particular have gone up over 1%. So this is one of the things that with that oil prices also have dropped. And I actually already predicted that Wall Street have been really talking about and cooking the news too much about oil prices going to go up $200 whatsoever because of XYZ reason, right? So I really see that that's not sustainable, especially related to inflation and how it's going to hurt the U.S. economy. So you can see the prices actually have retreated back very quickly. I really see the prices once it's got to resolve and reopen in the port. I mean, eventually, very quickly, probably, and also the demand in oil and gas we're going to drop after summer. It may retreat back to $70 per barrel. But of course, it's all subject to how it shapes up in the in the treaty and what's going on with with the international geopolitical risk. And the next thing, obviously, is continuously strong corporate earnings. So despite concern about inflation and interest rate, earning growth remain robust. Analysts continue to raise earning forecasts, and really some firms really continue to be, targeting higher than what they previously communicated. Okay, so from what I'm saying at this point, now we're in the mid of the month of June, and how does it matter to end of July, which is a month and a half? The three things gonna be drivers again: Fed messaging, inflation report, and job reports, and also second quarter earnings coming up. Once it passing, pretty much end of June, is kind of preparation of how company going to announce their forecasting and expectation of second quarter earnings. So that's going to shape up to whether is another test of whether we're going to be higher of the index or not, right? And again, the concerns over valuations, right? You haven't heard about it before after last Thursday when the market had been correction. I would call you see both Dow Jones Industrial Average, S&P 500, and Nasdaq have actually kind of corrected by about a couple of percent. Obviously, you kind of get back already with the great news about the war and continues talking about the AI space and and all the stuff that's going on. So we're also looking at the market dependent on the earning forecast still raising. I mean, these are the catalysts, right? Think about it. Earnings second quarter is still going to be very rosy still, okay? And even if oil and gas company get reported, they're going to retain a lot of margins that happen at higher oil prices in the second quarter. And with that though, the oil price, however, is forecast to be lower. Going to be lower, and hopefully with the port reopen. So that is basically giving you relief on the inflationary pressure. And also AI spending, again, a lot of companies continue to spend the money. I talk about CapEx versus OpEx. So that's really, if you look at it, is, you got to invest. You want to be rich. How you be rich? Well, you're going to put money in the stock market or gold, whatever, or cryptocurrency, right? You need to put money in the market. Same with the company. How the company will grow and give you more earnings if they don't put more money in investment, right? So really, even the market is reacting then, I may say overspending. As long as that spend giving you return from investors' perspective, and you've proven that's the way, it's actually, it will be really making the stock be able to justify the PE ratio and how well they're doing with the prices where they're at. So I'm really thinking that will be, catalyst, and also the mid-year election again. Really they want to make sure that showing the U.S. economy is healthy, is improving. There's a really still a GDP gross domestic product, which is the growth of the economy better than the forecasting. I will think right now the market you do want to buy, potentially look at Nvidia, Microsoft, which is a stock that get beat up pretty badly. Energy stock you may be less attractive now with the sharp decline in oil prices lately. And I will talk about some other stock that will be good to buy and sell from between now till end of the quarter. Thank you very much. Hope you have a great day.